Good morning. Good afternoon to my friends in Europe. I am Mark Sebastian. I am your only option, and this is our daily option pit morning gathering while we're in the storm. And folks, if you weren't paying attention overnight, there was a storm. And things have been extremely choppy and sloppy and basically kind of a mess over the last few days. The market is very headline driven. So we're up big. Tariff, we're starting to negotiate with tariffs. Oh, the Chinese tariffs are already in effect, and we're gonna have more at midnight. Market rolls over. And I should probably share my screen. And what we're left with is a pretty epic rollover on Tuesday. I told you on Monday, I'm not buying the main course yet, but I am buying a little bit more. This morning, buying a little bit more, not a lot. I'm just having another bite of the appetizer, if you will, because there's still a lot of headline risk and there's still a lot of chop and slop. So today what I'm going to do is kind of explain what happened last night. We're going to talk about where we are in the markets from a volatility perspective, from a trading perspective. And then I'm going to bring Leisha on, and we're actually going to look at charts and find the levels that we're watching today in the S&P, the triple Q. We'll look at gold and bonds, and then we'll close on what I believe is the stock you have to watch today. So again, getting back to where we are, overnight, S&P futures were down over 100, over 110 actually. The absolute low on S&P futures, let me get rid of that, came, overnight, in the morning on Monday. But we did overnight tag the low from overnight on Monday. So we didn't hit the new low. We didn't hit the overnight low that we had Monday night, but we didn't miss it by much. Overnight low was about 48.65, and the low is 48.33. So stone's throw from those overnight lows. That's what we're kind of dealing with and looking at. So what caused kind of the freak out? The answer is the bond market. The answer is the bond market. All right. I want you guys to write this down. The stock market is the tail. The option markets are the dog. But holding that leash is always going to be the bond market. It is 10 times bigger than every other financial market out there. And last night it freaked out. I believe somebody got liquidated on the Fed carry trade. I'll explain what that is in a second, but it's a very, very simple trade. So it looked like somebody got liquidated or unwound or freaked out and just blanket sold the 10-year note. And they blanket, and rates just absolutely exploded. Last night, the 10-year got to a yield over 4.5. The 30-year got back over 5%. Currently, the yield on the 10-year is 4.35. That is why we have recovered. Not out of the blue. We're not out of the woods. But that is why the market is no longer. That is what has allowed the market to recover. So what is this carry trade that we do in treasuries? It's a very simple carry trade. The yields on the futures relative to the cash market. So the cash market is treasury bonds themselves. And the futures market is like the 10-year note or the 30-year note. So what I do is I put up US treasuries. There's my collateral. There's my cash. And I sell futures against them. And there is a carry. All right, that carry. And I'm going to use a VIX futures curve to kind of show you what that trade looks like. There you go. All right. So now what I want you to imagine, and actually you don't even need to imagine. All right, this is the UST cash market, US Treasuries cash market. And I'm going to put a $sign for cash. This is our futures curve. Ignore the pricing. All right, so don't worry about the pricing here. All right, so what happens is I buy these, put them up as collateral, and sell this, and I make money on this spread coming together. All right, now, here's the problem, right? What if the yields here, what if treasury yields start going, and the bond market in response goes like that, and this spread widens out. All right, what happens if the spread between US Treasuries and futures really widen out? Right. That can cause a lot of pain. You know, even if you get to expiration, you're going to make money. The margin can get to be unwieldy. So what do? You unwind. You unwind the trade, and that actually pushes the trade wider. And there you have it. All right, so that was part one. Now that trade exploded and then relaxed overnight. And then Secretary Treasury of the Treasury, Scott Bessent, came out with what seemed like relatively positive statements, at least not negative. And we know that those had an effect on the market. How do we know that? He spoke to the American Bankers Association at 7:30 in the morning, at 8:30 in the morning, 7:30 Central. My times are set to Central. So just imagine where it says 7:30, it's actually 8:30. Here's where he starts speaking. And look what the S&P futures market did, straight up. So the futures market liked what he had to say. Oh, we did pierce the overnight high on futures. It's interesting to know. So that is what we're looking at in the market. And what we've been getting have been just insanely wild moves. So this yellow line represents average true range. How much are we moving every day? Peaked at over 160 on Tuesday, currently around 155. Just putting this in perspective, you got to go back to 2020 to get anything like this. S&P is kind of fighting around the 5,000 level. Seems to be where they've decided to stake their claim. So that's kind of what we're watching there. Qs are leading. Now, what don't I like about kind of this turnaround? I would feel so much better if the Russell 2000 was rallying with the overall markets. I mean, the Russell 2000 is still down 0.1%. That, I don't like the smell test there. I don't like that. So that makes me a little nervous about this overall market. But there are some stocks that, we believe have some value out there. And there are some things that, we might want to think about from a hedge perspective. So markets blew out overnight. If this is just a pre-earthquake, then, we've got to ask ourselves, so this is a chart. I want to go to a 1 day, 1 year. This is a chart of, I'm going to go IEF. This is a chart of, this is a chart of IEF minus HYG. I'm going to add a couple of years. I'm going to go back 10 years. We'll go 5. Well, you can see, looks high here, but is it? Take a look. Now, part of this was because bonds were so cheap. And then the spread, I want to do LQD minus HY minus HYG. I want to show you this too. All right, spreads between LQD and HYG, still not that bad. So I'm looking at HYG. And I'm thinking, if this thing really does absolutely melt and everything falls apart, HYG is going to get absolutely trashed. All right, here's HYG with 0 rates. What about with rates significantly higher? And you can see how quickly it can drop. This drop was from It went from almost 90 to 67. It's 23 points. And that's a bond. It's a bond fund. So here we've gone from 79 to 75. They're going to be $10 a downside in HYG. So that's a place I'm kind of looking to hedge when and I don't mean like I don't mean like near dated market collapsing hedge. I mean like buying some HYG puts with about 90 days and that are well out of the money and socking them away makes a lot of sense to me just as an overall portfolio hedge. All right, so there's kind of what I'm doing, what I'm looking at. As I stated, I'm pecking a little bit more here, buying a little bit more. Again, I didn't order the 48-ounce T-bone porterhouse, but, you know, I had my bloomin' onion. You know, I ate my buttered bread, thinking about maybe ordering the clam chowder. So, now that I've kind of laid out what I'm thinking, I'd like to bring in our chief technical analyst and one heck of a trader. She is Leisha Leslie. Leisha.
Good morning.
Good morning. So I kind of laid out what happened overnight, kind of where we sit. You know, it's like they set 5,000 as kind of the line in the sand here today, right? At least for right now. And, you know, people want to know what are the levels that they need to be looking at in the overall market today. Here, I'll stop sharing my screen. For those of you that don't know Leisha, Leisha was a market maker on the CBOE for 13 years. Is that right? 14 or 13?
I was in the pit just over almost 13 in the pit,
Yeah.
but I was on the floor for a very long time.
Yeah. Yes.
Started in college, so I was down there quite a while.
And then after she left the floor, she got into the futures business. And so she is, again, about the only person I know that is an expert on options and charting. I know my experts on options. I know my experts on charting. Don't know a person that's both. And that's what you get with Leisha. And that's what we love. And so now, and if you want to read about her, Profits in Pumps, she puts it out 3 times a week. If you're not signed up already, just, you know, get yourself registered. It's a great letter. So Leisha, we're looking at the S&P 500.
Yes.
A lot of lines there.
Oh, I know. I do want to show you though my latest pitchfork, taking the high, paused at the median line. Now it is holding the support. The bottom of the pitchfork support is holding here the last few days. Remember, folks, intraday doesn't matter as much as the close. When you're watching a support resistance level, you want to see where it closes. And every day so far, it's been able to close still into my pitchfork, meaning this is a valid support level here, 49.67. Below there, we start trading below there and start clearing these real bodies. Our intra-session low will be the next support level, 48.33, which, by the way, is the 50% retracement is 48.28. So right there on the Fibonacci sequence from the lows of OCT22 to our very highs. That means this rally, we're 50%, we've retraced 50% of that rally. And that's pretty much where we stopped on SPX, on ES. That's providing some support. And, you know, these things that we look at, you know, everybody's looking at, right? The whole world is looking at. traders, technical analysts, hedge fund man, everybody knows all these tools that we're using, right? So I guess that's why they work, because so that's what I'm watching. Now I have to say below there, I'm not seeing a whole lot of support below there. If we really start breaking down, and we've seen we can rally literally 220 points in 5 minutes. We could drop 200 points in a day, or
Yes.
in 5 minutes again, right?
Yeah, absolutely.
So that's not a far cry. 46.13 I'm calling. If we start to really break down again. We seem to be stabilizing a little here though. I would not be, now you can play, this is a big range, right? My there's some resistance 50.72 there, 50.73. But we really want to break out over that 52.52, even, 53. This is almost 5,300 right here. We want to get, break out this area. This is beginning to look like a bear flag here, isn't it? Just wallowing in this area. So it's holding support, but still looking shaky, I would say. This candle on Monday is called a high wave doji. It means mass confusion. The real body's smaller, and we have very large, long upper and lower shadows. So I think we're still in that mass confusion. But put your support resistance levels in there, and as you can see, they're honored.
They clearly are, and just to give people some context, Fibonacci was an Italian mathematician, and these levels are, I forget where they originally came from, but he was not trading the stock market. I'll tell you that.
Actually, they go back to 200 BC in Indian mathematics and Sanskrit.
Oh.
So they go back even further. They're found in nature, the spiral seashell and all that. There's all kinds of places. DNA, I think our DNA has it. Lots of natural
occurrences,
natural structures.
There you go.
Support Fibonacci. It's pretty wild.
And then a pitchfork is basically you use a past set of ranges, connect the dots between them, and then it will foreshadow the future ranges of the S&P 500, or really any stock that you put on it. So you've got Alicia. So 50.72, 52.50 levels on the upside. Downside level, you heard the lows from Monday, and then we've got some potential to really fall apart.
46.12, 46.13.
Yes. I would note that you had 40 on the lows. You had said 49.19 yesterday, and we literally kind of on a 5-minute candle went through it and then right back above it and then took off. So that was a really nice level.
I would also watch the RSI. Our RSI is an oversold territory, which we know it can last down there as long as it wants. When it starts to move back above 30 is when we get a bullish signal. Now, that is not something you would trade on solely. You want to see some other evidence, breaking through some resistance, some change in trend candles, some bullishness. But once RSI trades or moves back over 30, that is a bullish signal.
All right.
Right now, they're both still bearish.
All right. Next up is the NASDAQ 100, which is even uglier than the S&P.
Also, you can use these downtrend, uptrend lines on your RSI and MACD. That helps. It just gives you more things to look at, right? When you start to feel a direction, if the more things you can find to support that, the better, right?
Yes, and RSI is relative strength index, and that's just kind of a price behavior momentum tool. MACD, same story.
Yes.
So those are what those are for. Traders love them. That especially chartists, it's a nice confirming signal when your charts have already kind of told you maybe it's time to go bullish.
That's right.
Or bearish for that matter.
They're momentum oscillators is what they are, right? Same idea on the RSI and Qs. Watch for it to roll back above 30. We're again in this lower level after runaway gapping lower. Runaway gapping tells you your downtrend's intact, although we're taking a breather. The Qs, Monday's low will be support 402.61. That's right around my median line here on my larger pitchfork. That goes way back to 21. Again, the 50% retracement in the Qs is down at 396.78. So we haven't hit that yet. Well, I shouldn't say yet, but we haven't hit that. Not far. We're a few points away. Resistance today is going to be 423.42. We've seen how it stops here. It stops here. Stopped it this morning. Watch that level. Put these horizontal levels in on your charts. And I have support down at 412.88 on the Qs. Below there, 402.61. And again, we want to get out of this gap area, and we want to see a real rally, right?
Mm-hmm.
We want to clear this area and get back up here. We want to see RSI above 30, and we want to see our MACD curling bullish.
There you have it. Now the culprit of last night's debacle, the bond market.
Yes. Now it's funny because throughout this, the yields were going down, bonds were rallying pretty well.
Mm-hmm.
And then suddenly, and look at, they hit my resistance there on the pitchfork, topped out TLT. Now it's testing my median line. Below there, I have support 85.10. Watch for a close above or below 87.68 today in TLT. If we can't get a close above there, we're probably going to visit 85.10, that previous low on in January 14th. So I would be watching that.
All right. So the bond market, folks, very important. Start looking at it. IEF and TLT are two ETFs you can look at, or on Think or Swim /ZN will pull up the futures price. All right.
Also,
now the other thing,
real quick, your MACD is just crossing bearish, so
okay,
you may have more room for the downside.
Well, you know what was absolutely ripping while the bond market was getting destroyed last night, Leisha?
Gold.
Yes, indeed. I was about to say you're wearing some on your ears.
Yeah, look at gold. Folks, draw this uptrend line in gold. It held, coincided with my median line yesterday. It's right around that 3,000. I also have the 3,000 horizontally in there.
Mm-hmm.
Looks like gold wants to revisit 31.38 and then the high 31.66. Looks bullish. There
you go. Now, so I've told you, you've got to keep an eye on the bond market, and then you got to keep your eye on this stock, because this stock by itself basically forced the rollover yesterday. And this is going to be one of the stocks that we're going to be featuring in what I'm about to talk about. But before that, I want to look at Apple, because Apple, I've been warning people for weeks, Apple hasn't really participated in this sell-off the way a lot of these other names have. That has changed. And its rollover yesterday from up, $8, $9, $10 to down $9 on the low was epic and pulled the market significantly lower because it is so much of the NASDAQ 100 and the S&P 500.
Look at how now this previous low is down here, 164.27. Folks, this is how well my pitchforks are phenomenal. That previous low, 164.27, that'll be the next spot if Apple decides to sell off. But look at it's hugging and holding my median line here, which it did back here. And the top here is telling you that it's a good pitchfork, gapped right down to it, paused right there. I watched an Apple close above or below 172, 171.80. Again, just consolidation and and these channels, these large moves, right?
Mm-hmm.
This could become a Harami candle. Call the bottom. The relative strengths trying to move back above 30. It's not quite there. You start to see your MACD curl up. It may hold. It may not. If it doesn't, this previous low will be support, 164.55, and then below there, 154.40. We do need to get a close above that 186.60. Actually, I would use my pitchfork, 189, to revisit back up there, to get that rally going. Earnings are May 1st, not too far away. That's what I have for Apple.
There you have it. Do we have any questions for us today? Do you think this rally is going to hold, Leisha?
I feel like the market, it needs to take a breather. I mean, this is insane. These moves have been insane. I think everyone needs to stop, look, and just calm down. Right? Mm-hmm. I think we need a breather day. Maybe we'll get that today. Will it hold? I think we need some time. It's options. Like I said, it's sitting at the bottom of my pitchfork.
Yeah.
This is not bullish, though. I'm not seeing a bullish change in trend candle yet. I am not seeing. I'm not seeing bullishness. We may have another leg lower, I would say.
Yeah. Let's see if we can get to 572 today and then make some decisions. We do have a couple of questions. What's a suggested gold ticker for options? All right, if you want to look at ETFs, the answer is Vicky beat me to it. GLD.
GLD, you have some room if you would like to enter 288.88. Low resistance on the median line here, 286. But yeah, I would say not too late to enter GLD. Held the pitchfork support. Put this 272.29 in there also. Nice double coinciding support there. Inside Harami day, negating this bearishness, and sure enough, we gap higher.
Yeah. This is a good question. Mark, when are you looking to play SVIX to the upside or getting really short fall? All right. Well, interestingly, the last couple of days, there's been $500 million of inflows into SVIX. What I'm looking for, Alicia, if we can swap screens.
Oh, yeah.
Whoever's in control. Who's running the show here? Is it you or Christian?
Oh, Christian's got it.
All right. So this is the VIX futures curve as it stands currently today. What I'm looking for is April expires in a couple days, so that's kind of out on an island. SVIX is almost entirely May, and tiny bit of April, but it's going to start flipping to June here shortly. I want to see these two contracts the same price. So if May and June are the same price, that is my slam dunk to jump in. Am I going to nibble if I start seeing? We're already starting to see some of the volatility momentum, some of those gauges I use come off a little bit. So even with option prices really high on VIX itself, some of my other little gauges are saying volatility might be unwinding a tiny bit. But I'm going to really start looking to go short volatility. In other words, selling options. When these two flatten up, and that's going to be kind of what I'm looking for. How much are you watching the 9-day VIX versus 30? That is another one of my levers. Let's switch this to style to line. This is another one of my levers. And what I would note is even with the rollover yesterday, VIX 9-day started to roll over. We get 9-day back below 10. That's another VIX 9-day. So this is the VIX. This is the VIX, but it only looks at options that have a 9-day duration. So think like a weekly option versus the 30-day. And yeah, it absolutely spiked up. I want to see it start to pull back. I mean, there's going to be a lot of money to be made on SVIX when it dips back below 5. Even waiting till 0, I'm not going to, I wouldn't blame you. But I'm going to be looking to dip in probably while that indicator is still positive. But this indicator is going to fall really fast. You will be shocked.
There was sorry, when you're finished. There was a question on the bank earnings we have Thursday and Friday, mostly Friday. If that could affect the market, I think absolutely. I think the bank earnings come in, better than expected or nicely. I think it could give us a pop. Now, will it carry us out of this mess? Probably not. I would say.
Yeah, I think it's going to depend on the guidance.
Yeah. But I think we could get a pop out of it. And for some reason, I just feel an XLF straddle or strangle might be in order. I feel like they're going to come in bullish on the bank earnings.
You might not be wrong. So just kind of looking at the bank earnings for next week, XLX. So a strangle is when I buy an out of the money put and an out of the money call at the same time. And what I'm looking for is a move. So in this case, XLF is 43.65. The strangle I might look at would be the 43.44 strangle.
Yeah.
And that currently costs about $2. We'll just say $2.90. I'll make it $3 just to make your math easier. So if I pay $3 for the strangle, then I want to see XLF below 40.
It's $1.80, dude. $1.90 for Friday.
Next. Oh, are you talking to? Oh, I was looking at the 17th. Sorry.
Yeah. No, Friday. Earnings are all Friday.
Oh, you're right. I know. You're right. I just was looking at the wrong date. So yeah, the strangle, the 43.44 strangle is $1.85. I'm just going to round it to $2 again to make your math easier. So if I pay $2 for that strangle, so I own a put at $43. I needed to move $2. Why? Because I bought a call and a put. I got to pay for both. So I need to move below 41, or if it moves above 44, I need to move above 46. That is what a strangle is. And when you look at the movement without earnings, XLF has been moving about $1.40 a day. They're giving you the rest of the day, Thursday and Friday, for $1.80.
Not bad.
Smart. I like your idea, Alicia. All right, we got time for about one more question. What do you think about Amazon starting to cancel projects? Should we be looking for queues for a put payout? I didn't see any big headline on that. Oh, here we go. Amazon cancels orders from Asia suppliers after tariffs. Okay, so that's a little different. They're canceling, orders, not projects. Makes sense. When you probably don't, when you're anticipating the tariff dropping. So think about it. Let's say I need a certain amount of M&Ms every day, bags of M&Ms. Let's say I sell a bag of M&Ms every day. All right. Now, how many am I keep? How many am I keep in stock? Well, every now and again, I sell 2, 3, 4, or 5. All right. So historically, I've always had, let's say 10 bags of M&Ms in my inventory, or let's say 20. All right. So 20 bags. And on average, I'm selling, let's say, about 10 a week. Well, if I'm anticipating, they raise tariffs. So if I'm anticipating those tariffs going back down, what am I going to do? Well, I used to keep 20 in my inventory. I'm just going to keep 15 and order as I need it in anticipation that when tariffs drop, I'll start buying back more. I'll keep a more firm inventory, buy a little, the bulk savings there will be worth it to me. Scott wants to know what's the deal with the spread between ES and SPX. That's actually a mathematical spread. There is not really a good ES versus SPX carry trade. It can show up every now and again for a few minutes, but generally speaking, that entire relationship is so tightly arbitraged. All that has to do with is that there's a lot of dividends and interest in the S&P that are related to saving money owning futures versus getting dividends but paying interest, long interest to own stocks. All right. Also, yeah, you'll get overnight moves that'll throw things off. All right, Leisha, thank you so much for joining us. I want to again remind you, we're here every day with you guys to guide you through what we're looking at. Sign up for Profits and Pumps, and check and make sure you're back here. And if you're watching us on YouTube, like, subscribe. If you have questions, I do. For those of you not following our YouTube channel, I put out videos every night. And if you would like to know about a stock or about a market scenario, ask questions over on that YouTube channel, and we will answer them. All right, everybody. We'll see you back tomorrow at 10 a.m. Eastern time. Yet again, to guide you through this chaos. I'm Mark Sebastian. I am your only option, of course. And there is Leisha J. Leslie.
Thanks, everyone.
Our queen of the candles. And we hope you have a great rest of your Wednesday and look forward to seeing you tomorrow.